Hi, I'm Lee Stone and this is your UFXBank Week in Review. Today we will be covering some of the major financial events of the past week and how they impact the global currency markets. But before we cover the headlines of the week, let's go over the last week's rises and fallers. The euro fell sharply against the dollar in continuous daily drops throughout the week, with the exception of a slight reprieve on Thursday. All in all, the euro lost over 3.5% versus the dollar and was last trading at 132.48. The British pound also performed poorly against the dollar, having a negative closing for each day of last week. The pair opened the week at 1.6002 and ended Friday trading at 155.92 for a total weekly loss of just over 2.5%. The USD extended its weekly gains on the yen for a fourth week in a row. The greenback moved up 0.75% on the week, and the pair was last trading at 84.09. The US-Canadian dollar pair had a somewhat mixed week. The pair saw a large drop on Wednesday, but consistent daily gains pushed the pair upwards 0.25% on the week. The USD CAD was last trading at 102.03. Oil had a solid week, gaining just under 2% to close the week at $83.76 a barrel. Gold traded mixed throughout the week, finishing with a small gain of 0.4% and last traded at $1,363 per ounce. Irish debt crisis continued to dominate European news this week, though concerns seem to have shifted to other troubled economies in the Eurozone. In other news, the Australian dollar fell against the US dollar after the Australian Central Bank governor stated that interest rates would remain at their current levels. The New Zealand dollar also fell as a result. The big news of the week comes out of Asia, where tensions between the two Koreas has stoked fears of a possible regional conflict. Asian stocks and currency prices fell as investors flocked to safe haven currencies like the US dollar. Here to discuss this with me further is analyst Martin Smith. Hello Martin, how are you?
Hi Lee.
So, could you break down what happened between North and South Korea this week?
Certainly. On Tuesday, North Korea fired nearly 200 artillery shells on a South Korean island in the Yellow Sea, killing 2 soldiers, 2 civilians, and causing damage to dozens of buildings. The South responded with its own artillery fire, but stopped short of a full military response. This was one of the most serious flare-ups between the two countries since the Korean War ended in 1953. Any full-scale conflict between the two nations could threaten the stability of the region. Now, China is an ally of the North, whereas the US is a staunch ally of the South. And the North is claiming that this was a warning to the South over recent provocations, namely a planned military exercise between the US and South Korea. This military exercise was planned after the unprovoked sinking of a South Korean Navy vessel in March of this year.
So how did this affect the Asian currencies?
Well, if war does break out, which I believe is unlikely, it threatens to pull in the whole region, at least financially, because it takes away investor appetite for risk. We have to remember that this also occurred around the same time that we have concerns in Europe over the debt crisis. So this has created an overall atmosphere of risk aversion, which is driving investors towards the dollar. The Korean won had been doing quite well for several months and then tumbled as a result of the recent events. The Singapore dollar dropped nearly 2%, Malaysia's ringgit fell 1.5%, and the Asia dollar index fell to its lowest level in 2 months. I don't believe this recent skirmish is going to lead to war, but it's better to be safe and hold your money until signs point to calm.
Now, you mentioned the European debt crisis. Is there anything new with that?
Well, if you recall, we discussed Ireland last Sunday, and at the time they had not yet accepted a financial aid package. They have since accepted a debt relief package, and for a very brief period there seemed to be a feeling that we'd averted a potential catastrophe. Now the attention is being shifted onto the remaining weaker economies in Europe. The ECB and some European governments are putting pressure on Portugal to accept an aid package to avoid contagion spreading to Spain. What we can say is that there is an overall feeling of concern and unease in the region regarding the euro.
Okay. Our Ask the Broker question of the week comes from Greg Philippakis of Athens, Greece, who writes, I saw that Asian currencies fell after the fighting in Korea, but why did the Canadian dollar and other currencies fall because of this?
Well, this is simply risk aversion. The general uncertainty and instability that exists right now in Europe and Asia has lowered risk appetite. Oil, which drives the Canadian currency, is a commodity related to production demand. So when there's economic uncertainty, production slows down and the demand for oil decreases. In this particular case, I think it has more to do with risk aversion and the strength of the US dollar. If the instability continues, you'll see a much larger drop-off for the loonie.
Thank you very much, Martin. We hope you enjoyed our weekly review, and we hope you will join us next week. Until next time, be sure to visit us at UFXBank.com for simple, safe, and secure trading. Also, you can follow us on Twitter and Facebook. To submit your own questions to our weekly broadcast, please email your questions to Martin Smith at askthebroker@UFXBank.com. For UFX Bank, I'm Lee Stone. Good luck and happy trading.